Have you ever wondered how institutional investors think, move and trade in the markets? If so, you're in the right place, as today we're going to level up your trading by introducing a very powerful way of trading the markets. Hi and welcome back to the How to Trade YouTube channel. My name is Connor Woods, one of the coaches here, and I'm very excited to be delivering this video to you because it's all about smart money concepts. This is the way that I trade personally, and in this video I'm going to be giving you a full guide on trading the smart money way. You're also going to learn a little bit about where this new way of trading comes from, as it's really burst onto the scene in the last few years and is growing rapidly in popularity. So let's get started. So what actually is smart money? Now, smart money is a collective force. The volumes that a retail trader trades is minuscule compared to what an institutional player will trade. And you've got that little diagram here. You can see who are the top of the chain. You've got liquidity providers, major banks, investment banks, hedge funds, and then you've got the retail traders all the way at the bottom. Now, the term was initially a gambling term for someone who had insider knowledge, and so it's fed into the trading world as basically someone having knowledge of what the big players are doing. In truth, no retail trader truly knows what and why the institutional traders are doing, but you can get clues from it. Bank and liquidity providers are really the force behind the markets. That's why they're at top of the chain on that diagram. Now, we want to be on the coattails of these moves, and it is possible. Is it right all of the time? Of course not. Nothing is. However, if you can catch on to one of the moves driven by institutional buying or selling, then it can yield great profits. Let's take a look at what some of those concepts look like actually on a chart. Here are the most powerful smart money concepts in the game. Order blocks. Some people also call them supply and demand zones, and this concept is fundamental to understanding SMC. Essentially, order blocks refer to a market condition when central banks, governments and large financial institutions accumulate or distribute large orders through several big orders. Their footprint is left behind on the market as the last candle before the big move, as you can see here. We've also got breaker blocks. Now, they're just essentially order blocks, but they failed to hold the price in the trends. They've been broken through. Traders then use them to trade in the opposite direction, similar to a break and retest. We've also got fair value gaps. Now, they're really unique. They're also referred to as FVGs. Now, it's a trading concept that occurs when the market moves quickly from one price level to another. That often leaves gaps on the price charts. This is common over the weekend or during big news events. Now, liquidity, often regarded as one of the most complex smart money concepts, but also the most important. It utilizes a theory that pinpoints areas on the chart where orders are either sitting above or below, waiting to be collected. Break of structure. One of the basics of smart money concepts, it focuses on identifying shifts in the market's overall trend. A break of structure is said to have taken place when the price sets a new high or a new low while breaking the former ones. Now, I can't explain them fully all in one video, but don't worry, keep an eye out on the channel for videos on each one of these concepts specifically. We also have articles on each of these as well on the How to Trade website. I just wanted to show you an example of what a typical smart money trader would have on his charts. This is what their chart would essentially look like. Obviously, they've got different variations and different templates set up. This is what mine looks like. I've just loaded up GBP USD on the 4-hour time frame. You can see I've got my fair value gap in there. I've got a couple of order blocks. I've got a liquidity line at the top there. I've got buy side liquidity at these equal highs, and then down here I'm starting to study the market structure. You can see initially we were bearish. We had a break of this low, and then suddenly we started to see that market structure change. As soon as we got a break of this high, which we have, we've now got our new market structure in place. We're potentially looking like maybe a bullish run up towards this fair value gap and maybe up towards this upper order block. So that's the typical sort of things that you will see on a trader's SMC sort of chart. And when you understand the concepts individually, you'll start to be able to see these really with the naked eye, and it's really like a blank chart that you go on and then start to actually put your drawings and templates on there. So I'd recommend you get some templates set up for the ones that you understand, learn them individually, and then start to draw maybe the market structure first, then try and spot fair value gaps, then try and spot order blocks, and then it'll all start to come together. That was your introduction to smart money, and hopefully this has given you an insight into the exciting concepts that you can learn. Remember, smart money is what really can make the market move. They have the power. And if you can gain the ability to hunt down and be on the coattails of these institutional moves, then you're sure to elevate your trading career. If you have found this video helpful, please give it a thumbs up and share it with other traders who could benefit from this knowledge. Don't forget as well to subscribe and hit that notification icon so you never miss out on future content. And there's also a link to an article on this in the description below. Thanks for watching and happy trading.